Okay, so welcome to our new podcast. And today we're going to start talking about some financial issues, some laws that, as far as taxation and lending, that obviously need to be fixed. Um, and yet we never get around to fixing it. One pet peeve I've had for a long time is the payday loan system. Which is usurious, ridiculously high fees, ridiculously high interest rates, horrific penalties for being even a little bit late on repayments. And in the old days, that kind of stuff was considered usury and was illegal. It was done by loan sharks. But what used to be the domain of loan sharks is now apparently the domain of payday lenders, who are just legalized loan sharks, essentially. And that's not fair to people who are struggling. Almost everyone who needs a cash advance from a payday lender is somebody who's pretty desperate for money. So not doing well financially, and the payday lending system is just predatory and keeps these people pretty much in debt forever if they're unfortunate enough to actually go down this road. So I think we need nationally just a lending fairness and lending standards, which would apply to payday lenders as well as any other lenders like standard bank loans. And here you can divide up loans into what they call short-term loans, 1 year or less, usually for fairly small amounts of money, less than $5,000, and then long-term loans, which could be things like mortgages, which don't have to be a lot of money, but usually are. I mean, it'd have to be at least $1,000, and often they're much more than that, like with mortgages. So here are the laws. You can read them here that I would just put in, which defines how the maximum interest rate, the maximum origination fees, and the maximum penalties for being late on repayments. So for example, for short-term loans, these would be standard loans, what they call standard loans, which is where you just spread the interest rate evenly over the life of the loan and divide it evenly into the however many payments, 6 or 12. You can't amortize the standard loans, so short-term loans can't be amortized. There would be a 5% maximum origination fee and an 18% maximum interest rate. And that actually would also be the same for long-term loans, with 5% max origination fee and 18% max interest rate. Otherwise, you get into truly usurious territory on those things. So the origination fee would in both cases be deducted from the original loan amount. So for example, if an originator is charging a 5% fee and you need $1,000, whether it's short-term or long-term, they take the 5% out up front. That'd be $50 out of $1,000. So your loan would be for $1,000 plus interest, but they would only give you $950. So that would be the funding of the loan. And then added whatever interest rates. So in a standard loan, let's say the interest rate was 10%. You'd have a $1,000 standard loan. The interest rates adds $100, 10% of $1,000 to that. So you owe $1,100, and they take out also $50 from what they give you. So you get $950, and you have to pay $1,100 back, which is divided evenly over, let's say it's a 1-year loan, so over 12 months. So it works out to a little less than $100 a month to repay that loan. And here we see there's loans are always due on the 5th of the following month following after the loan is originated. And you have a 5-day grace period, so essentially until the 10th before you can be penalized for being late. And then if you're up to 25 days late, between 5 and 25, they can add a little bit of penalty to that. So between 5 and 25 days, you could add a 5% of the loan balance amount as a penalty, and that would be spread out over the remaining payments. The payment, because these longer term loans are often mortgages, there's different penalty standard, and they're often much bigger loans. So there's different penalty standard here for long-term loans and short-term. But bottom line is it keeps things more reasonable for people, so they don't have to worry about fees and late penalties and stuff rapidly spiraling a $1,000 loan into a $10,000 payback, which can happen with these payday lenders. So this just keeps it out of the usurious territory. And I think this would be a fairly simple change to the law. This would be a national law, so it would apply to all states and lenders, and would put the worst of the payday lenders out of business. The ones that have to charge crazy fees in order to stay in business, they would go away, and they should go away. So, because it's just unethical what they do, preying on people who are already struggling. It's just bad. And they claim, well, their argument is, well, these are high-risk people, and regular banks won't lend to them, so we need to cover our risks with these usurious rates. And they don't say usurious, but that's what they are. But, my feeling is if you can't make your money back with these kind of rates, which are already pretty high, then you don't deserve to exist anyway. This is the kind of the first thing I would deal with in this structure. But the next thing, which we'll deal with in the next video, which is much more important, is a new way of taxing businesses. Because the current way ain't working. We've got businesses that make enormous profits, like Apple Computer, and pay virtually no taxes because there's all kind of loopholes they can use. And businesses offshoring their profits so that they can't be taxed here. And there's all kinds of crazy depreciation rules. There's all kinds of ways that businesses can get around paying what really is their fair share of taxes, which shifts the taxation burden way more to individuals, and I think it should be more equally shared. So particularly since a lot of U.S. businesses have been doing quite well recently. So next video is really going to deal with that issue, the taxation of business, and a whole new way of doing that, which will make it much harder for businesses to get out of paying their fair share. Okay, so that's it for this first video, and now we will go to, we'll take a break and start up the second.